As you work towards writing your final project, I might tune in occasionally here and just give you some short little videos about things that I would look for, that I do look for when I'm analyzing a company, and things that I would certainly include in a report or a paper of this type. And a couple things, I jumped ahead, but I went to the FINRA site again because I like the FINRA site, and I picked a company here. It's one that I've had on my watch list. I've never pulled the trigger on it, but McCormick and Company, which is the spice company. And I look at that, and in this case, I went to the financials and then the income statement, and maybe later I'll look at the balance sheet or something. But first off, to find the annual report, I just typed in McCormick annual report, and it came up. I Googled it, or Bing. I used Bing, and it came up like this. I really ended up having to scroll down a ways, but in their case, come down. I had all these quarterly reports, and I got the annual reports, and I can go back. Gosh, not quite forever, but a long darn time, and so hopefully your company will have something like that. It's usually under investors or investor information or investor relations. Take a look, because it's really important to go back and look at annual reports from prior years, and I'll show you what I mean. As I look at McCormick, one other thing before I go on, one of the reasons I like FINRA is because I can come here and I can take a look at this, and their revenue's growing and their gross profit's growing. Well, if their revenue's growing, I would assume that in a dollar sense that should be, and their operating income's growing. But just at a glance, that maybe doesn't tell me as much as this, for example. Okay, so the revenue, we classify that as 100%, but their cost of revenue, it's gone from 58.5 to almost 59. Maybe not a big deal. It got up close to 60 in 2019. Okay, not a lot of change there. Their sales, SG&A, sales general and administrative costs. So look at that here, from 2018 to 2019, took a pretty good drop. That interests me. Okay, and I want to know, that's nearly a 5% drop, which led to, let's see here, total operating expense, operating income. Then if we go back, to here, it was about 15%. Now we're up to about 18.3. So we've had a pretty nice increase. We had a little decrease in gross profit. Well, actually, we had a decent decrease from there to there in terms of gross profit, but we picked that up in the operating income. I might even want to go back and see why we had that decrease in gross profit then. Could be sourcing or whatever, but let's, I found this, so I'm going to go jump to that first. But this total operating expense, and I need to go find the 2019 annual report. I think that's what I got here. Okay, this is the annual report, and the first part of this is going to be stuff that they like to talk about. In this case, their Form 10K starts on page 19. I'm just going to click on that. I'm going to scroll through a lot of this stuff at the beginning. It tells you about the business, and they talk about those things, and that's all good. Okay, but as we go down a little bit, we're going to get to, if I keep scrolling, okay, some financials, right? And this is kind of selected. They call it selected financial data, and it's kind of abbreviated stuff that should be similar to what we're looking at here. It won't always be identical, and I'll show you one thing a little bit later that causes some changes. And then we get this: management's discussion and analysis of financial conditions. Wow. Okay. And I was kind of concerned, or not concerned, interested in why their cost, total operating expenses, dropped dramatically from 2018 to 2019. Look at this. It says cost savings and business transformation. We are fueling our investment in growth with cost savings from our CCI. I had to go look that up. I actually Googled that. I don't know if I got it here. Yeah. Comprehensive, where does it say? Comprehensive something. Comprehensive Continuous Improvement Program. Okay. this is the type of stuff I'm going to put in my paper, that they've had this, and it's actually been in place for quite some time, but they've had this comprehensive continuous improvement program that's been in place for a long time, and that's what has helped lower their costs. Okay, sometimes these things, and this is kind of a weird deal here, and so I'm not sure what to even make of it necessarily, and I wouldn't worry too much about it, because they've got restructuring and merger costs, but then they've kind of, it's identical, the offset to that all the way along there, and so I'm not sure exactly why that is, but, and they're not big amounts, so I'm not terribly concerned about it, but my guess is it has to do with some investments that they're doing with that CCI. But now I know why their total operating expenses came down so much that particular year. And so I definitely want to report on that. Okay. And I come down and I see, ooh, provision for income tax. You know, it's usually about 3.5, 3.5. What's this? Okay, why did that drop so much? Well, that's the 2018 annual report, right? So I come here and again, I'm at that management discussion of, and I had to scroll down, I had to read through it a little bit. Okay, diluted earnings per share was $7 in 2018 and $3.72 in 2017. The year-on-year increase in earnings per share was driven mainly by a lower effective tax rate coupled with benefits of the U.S. Tax Act along with higher operating income as described above. Okay, so they excluding the effects of special charge, transaction, integration expenses, and the non-recurring benefit of the U.S. Tax Act, talks about what happened to their adjusted earnings. So they got a big benefit from the U.S. Tax Act. And I might read through this. I would. I hadn't yet, but read, what exactly maybe took place there. And I may or may not want to put that in my report, but it's important to kind of read through and understand. Now, here's one thing I want to point out, because you guys may come across some weird things like this too. Diluted earnings per share were $7 in 2018 and $3.72. Well, wait a minute here. Mine say $3.50 in 2018 and $1.86. What happened? Well, this is exactly half. Okay, so I'm quite sure that what happened, and I didn't go look at it, but I would bet dollars to donuts that they had a stock split, a 2-for-1 stock split. That's not particularly unusual for companies. Okay, all that means is that if there were 1,000 shares outstanding, there's going to be 2,000 shares outstanding, but everything then in terms of per share gets cut in half. Earnings per share, those types of things get cut in half. And so when we're looking here, they've gone back and readjusted these or based on the stock split, whereas the annual report that was here is not based on that stock split because they hadn't split the stock yet, right? So there's a couple of things, that I found that are really kind of interesting. I know that their, earnings per share here had a big bump up because of the tax thing. So I'm not that concerned with that. That's kind of a one-off. But I want to report, though, too, that the earnings per share have grown. If I look at the diluted from 185 up to 284, that's a pretty nice growth rate. This is trailing 12 months. If I look at just through 220, still up to 278. That's not too bad, right? That's a pretty nice growth rate, really, for the 5 years. Again, throwing out the one-off. What's the difference between basic and diluted? Diluted simply takes into consideration some stock options and stock compensation that they provide, oftentimes executive officers and whatnot. Okay, so I don't want to get too long in the tooth here on this and go too long, but just to give you guys an example of the things that I look for. And sometimes you just got to go down kind of line by line and look for some of those things that can jump out at you. Look at that. Net income from continuing operations went from 9.88 to 17.26. Ooh, might have to go see what's going on there, right? Okay, because they had some adjustments. Well, that has to do with taxes, right? Provision for income taxes there, it was an expense, and here it was actually a profit. They got a credit, basically, and that's what made a difference down here then in the earnings per share. look at them. If you have questions about those, hit me with them. I love doing this stuff. I like to open these up and take a look at them and try to figure out what's going on with these companies. Sometimes purposely to maybe as an investment, but otherwise I just kind of like to read through them and read the financial statements and see what's going on. So give you some ideas. Yeah, again, I'll maybe spend some time on the balance sheet again a little bit later, but this should get you started.